Markets are generally steady today as traders are cautious ahead of the Federal Open Market Committee meeting. Risk markets have rallied recently on speculation of a third round of quantitative easing from the Fed, with the Dow and S&P 500 making new 2012 highs. However, the buying momentum is not strong this week as the S&P 500 struggles around the 1440 mark while Dow hovers around the prior high of 13,338. On the other hand, in the Forex markets, the dollar sell-off has extended this week on optimism that the Eurozone is finally solving the debt crisis. Some volatility would likely be seen today, but the overall technical outlook favors further downside to the greenback in the medium term no matter what the results of today's meeting are. But which currency would outperform will depend on how risk markets respond to the Fed. We expect the Federal Open Market Committee will make a number of adjustments in its monetary stance, economic assessment and statement language in the September meeting. Chairman Ben Bernanke's comments at the Jackson Hole Symposium raised hopes of further Fed easing. Disappointments in the August employment report last Friday intensified speculations that the Fed would announce QE3 as soon as the upcoming meeting. Our bottom line is that the Fed would push back the earliest date of the first rate hike, deliver a more dovish tone in the statement, and lower economic projections. We tend to expect announcement of QE3 at this meeting. Otherwise, the chairman will likely state that further quantitative easing would be implemented soon. Another major focus today is the Swiss National Bank meeting. Much volatility was seen in Euro Swissy last week as the cross jumped to as high as 1.2155 then engaged in wide-range trading. The European Central Bank's OMT announcement was certainly a trigger to the volatility. And besides, there were rumors that SNB could raise Euro Swissy from 1.2 to 1.22. The relief in the Eurozone's situation, in particular with Spanish yield comfortably back below 6%, makes it good timing to raise the floor. But so far, this is nothing more than a rumor, and we'll need to see what SNB would announce today. Earlier in the Asian session, the final Reserve Bank of New Zealand statement from Governor Alan Bollard was largely unchanged from July's. Yet, after looking into details, this one delivered a more dovish message than the previous one. The central bank left the official cash rate unchanged at 2.5% but pushed back the timing of the first rate hike to the end of 2013, from mid-2013. Global economic headwinds will eventually affect domestic developments, while monetary easing from other major central banks has sent the New Zealand dollar higher and higher. The market has now priced in a 50% of rate cut from current level next year.